An MIG Bank technical strategist is with us now. Ron Williams has over 10 years of financial market experience. Welcome to the programme, Ron. And first of all, I wanted to kick off with the euro-dollar because you have this technical chart here. You're saying technically it's oversold and we could actually see perhaps a rebound after this downward trend.
Yes, I mean, we should expect a relief rally on the back of price oversold conditions. We can see here on the indicator being below the oversold levels. And bear in mind that we've had a major sell-off, 14 down consecutive days after this breakout from this range that we've been in on euro-dollar for about 4 months. So we should see a relief rally, and that is also supported by the positive news coming out of Greece, just stabilizing the market sentiment at the moment.
But also, though, despite contagion concerned about Greece, we've got the dollar still seen as a haven. You're also signalling that $1.2624, you're saying macro expectation is negative at this particular level.
Yes, I mean, after we get this expected relief rally, we should resume down. It is
I see, so short-lived.
Yes, a short-lived relief rally, and we should head back down a medium-term to long-term downtrend that we're still in. And the target is into the 2012 low at 126.24. Thereafter, the big level after 126.24 is going to be 120, so that would be the major psychological level thereafter.
I see, so perhaps buy now, but then do get out before the rally turns again.
Yes.
Let's get on to your second chart that we have at the moment, Ron, because the next one is all about gold. Gold cycle, you say there's downside risk, because this is the 5-year trend that we're seeing at the moment.
Yes, I mean, gold's latest 5-year trend, highlighted by this red line here, has been breached officially, but there is a line in the sand that is holding the market at the moment at 1522. This is what I call the make or break level. Okay. If we do hold above that, it's positive that you might get some stability on the gold market, but beneath that, the downside risk is into 1470 and 1300, and these are the medium-term cycle points.
So we could see the make or break literally in the next few trading days?
Yes, and then bearing in mind that gold can move in a big way. Just a month or so ago, we had a $103 drop in just 1 day, and so that's the type of volatility we can see on gold. And one thing that investors and traders should keep in mind is gold has been trading as a safe haven, but more recently has been more of a risk trade.
It's been more a commodity, really. It's been acting on concerns about the economic growth and environment.
Exactly, and this is on the back of maybe a broad deleveraging during what seems to be a more volatile period in Q2 and Q3.
People just needing cash, so selling their assets like gold to be able to put in stop gaps and the like.
Exactly, and gold has been that popular overcrowded trade up into that 2000 psychological mark. So what we're seeing is just a technical unwinding of this position. But my view has long been that during the summer to autumn months, this could present a buying opportunity for long-term investors.
Okay, so perhaps a buying opportunity coming up in the next quarter or so. And Ron, lastly, we go on to volatility. We love this index here at Bloomberg, the fear index, the VIX, the volatility index. Now, it's been at its lowest levels actually since before the financial crisis, before 2007. But you say we could actually start to spike higher.
Yes, indeed. I mean, we should be more averse to kind of spikes in volatility. This is the new normal, where we've had more frequent spikes in volatility and more larger spikes.
Quite often in the second half of the year. Is this a seasonal thing?
Yes, I mean, there's a popular study going back many decades that during the spring and the summer period, that volatility tends to increase.
Sell in May, go away?
Exactly, sell in May and go away. There's been some question as to whether that will hold true this year, but my expectation is it will, and it already has shown that. And as you just mentioned on the onset, we are unwinding from historic lows, last seen pre-financial crisis. So this is very irrational at the moment, bearing in mind some of the black swan risks that we have waiting for us, maybe.
And the logic behind sell in May and go away in the respect that volumes are coming down, so volatility creeps up because there's just fewer people in the market. Right?
Exactly, and perhaps this year it's being driven by profit taking after some very good trends that people have been doing well in. But with the volatility increasing, we're likely to see further upside on volatility.
Ron Williams, thank you very much. Ron Williams, technical strategist at MIG Banks. Thank you for your time.